Good morning, everyone. Paul here with GammaEdge. Today is Monday, the 2nd of May. Let's go ahead and get started. Pause your playback right now. Take a read of this. It's important to you. It's important to us. When you get done, go ahead and hit the play button. Taking a look at the overall index conditions, both on the SPX and then the index ETFs. We're actually seeing a drop across the board in all of the net negative gamma. Not a big amount, and we are not seeing a corresponding rise in the call gamma. As a result of that, although we are seeing some relaxation here, still very negative, and I think that kind of points the way that we've got a big hole that we're gonna have to dig out of. Same thing here on the Qs. Qs did show a slight increase in the call gamma, but overall net positive gamma, net negative gamma drop there. Everybody else not really showing anything on the call side. Taking a look at the expirations, we are between the goalposts again across the board. So SPX, SPY, Qs, and IWM. What that means is that we've got these dominant levels below us and above us, and you can see by the curvature of the red line here, we are in a net negative gamma condition across the board. The zeros are where the green line and the red line intersect. The dot is our current price as of the close of Friday. Why this is important is that these levels will become support until they are not. And so these areas of liquidity here are something to watch. If we lose these areas of liquidity, and we drop below these, you can see that we have a lot of puts that would be in the money. As we go left here, the in the money amount increases, and for the SPY, for the Qs, and for the IWM, which are equity settled, that could actually result in a reversal event, because as people close those positions to lock in those gains, they're closing those puts, they're getting longer relative to where they were, the dealer's getting shorter, and the dealer will have to buy in order to compensate. That could actually cause reversals across the board, something you want to be aware of. I've highlighted the key levels that you want to watch here as we drop. Taking a look at the gamma history for Friday and really the last 30 days, we are seeing dropping of net GEX, which we think is the monetization of puts. As we drop the short-term gamma, this typically indicates a potential upside move. We want to watch for that. You can see that at least in the SPY, the Qs. IWM is kind of an odd-looking animal right now, not very strong, not really any major demand there. So put some details down here in the notes. Make sure you take a look at those and are able to understand what we've got there. I think it's pretty important. Taking a look at the flow summary, Friday actually set up some bullish divergences. We had puts being closed, which gave rise to a net overall for the SPY in a setting us up potentially for a move upward. We had puts being closed in the Qs into the afternoon, again given an indication of a rise into the close. IWM, as I just said, was problematic. We are actually seeing puts being added to the small caps, not taken away, and that sets up a downside move or whatever. We've got a mixed picture if you take all three, but clearly the SPY and the Qs are constructive with the potential to move up. We want to definitely take a look at that as we go forward. The market model, terrible breadth. We had not quite linear down like we've seen in the past on Tuesday of last week, but certainly very, very large magnitude. This is the filtered cumulative tick. This is the institutional filter that we put on here, and pretty much steady throughout the day, except into the very last bit of the close, which we think is the dealer adjustments that we're going into the end of the day. Taking a look here, this setup here that I have at Circle 1, this is a great setup. We get a reversal intraday. Always like to see that. We needed a continuation on Friday. We did not get it. With that and the drop below these short-term moving averages, the white lines that you see here, that means if you got in these areas, protect your gains. And then, of course, if we drop below those things, those are considered the short. You can see the SPX went up. We had a flattening of the cumulative tick, not really participating wildly to the upside, and then you could easily shorted this particular area and done probably pretty well on a short-term play, on a hedging play or a scalping play. Longer term, everything's pointed down. So my bias personally is to sell the rips. So if we get any move up, any divergences, I am playing the downside. Structure levels, they're all listed here. Effectively, you can see we've got a lot of overhead, not a lot below us, right? So that opens the door to these downside moves pretty easily. Just be aware of that we've got to clear a lot of this, and the only way to clear this is to take the puts away and start adding calls and have a lot of the dealer response be in such a way that it pushes us up through here, and we're not seeing any of that right now. On the ES, which is the June contract, levels are updated here, kind of more of the same. You can see we're below this key level, 4,200. Really opens the door down to 4,000, and you can see overnight the VIX did not relax much. We're still at 33 and change. We need the VIX to really come down in order to get any type of participation. It's possible. Any reduction in volatility this week with such a heavy negative presence on the negative gamma side could actually lead to a Vanna flow. We're just going to have to wait and see how the market does what it does, and if we get this monetization. Taking a look at the SPX structure, we're deep in the red. We're up here, 41.31. We've got an amazingly weak demand for the calls compared to the puts. As you can see, I've highlighted all the key levels, a very loose transition area here. It's going to be very messy if we get up in here, and you can see these areas of liquidity here, which will be overhead resistance until they become support. It's going to take a lot to plow through here and get back up into this. And again, we need to see calls build out. We're not seeing any demand for calls. On the expiration profile, fairly strong expiry today. Nothing really much tomorrow. Minor on Wednesday ahead of FOMC. Friday is getting a little stronger also. This in aggregate could lend us towards or push us towards some sort of a rally. Not saying we are going there, just saying it could push us in that direction when you have all those puts being monetized and volatility coming off. You could actually get some Vanna flows. Next week and beyond, very weak into the monthly expiry. This has grown significantly compared to where it was last week. The 0 DTE, very significant negative value coming off today. The upper range, you can see a very high expected move. We did a video this weekend on our calculations of expected move. How this number is derived is one of those methods that are in there. Very large expected move anticipated. Open, high, low, close, not open to close or close, so just be aware of that. Positive that's coming off here at circle 4. Very doubtful we'll get anywhere near that. I think it's more probable we could push towards this transition area here at circle 5. Just note this 4205, 4210 layer level, as well as this 4225 level. To the downside, you can see visually where the different liquidity areas are going to be. If we lose that 4100 area, you can see we got some stickiness in here down to 4045 and 4050 today. Below that, 4000 is probably the stopping point for today. If we break through these areas, I'm not anticipating that we will, but with such a wide expected move, there is a lot of puts that are out there. Taking a look at the combo, excuse me, the combo for everyone is just the AM and PM settled. We do not combine any other instruments in this. It keeps it cleaner. An extremely large negative gamma level associated with the SPX. In fact, this level is probably in the top 10 negative that we've seen since we've been keeping track. You can see just a sea of red in the deltas. You can see here a sea of red in the overall net gamma levels. Down here at 4,000, we've got the dominant amount of puts coming off. This is POI. This is also minus GEX. Positive GEX isn't even shown here. It's up at 4,700, so way off the charts here. No chance of getting anywhere near there. You can see some transition areas up in here, that Lucy area that I was talking about. I do want to call out that the 4100 level, look at the delta levels as well as the net gamma levels, extremely negative. If we lose 4100, I think it's very easy that we could start pushing south here. So when we take a look at the various setups, not a lot in the bullish, except we've got a massive amount of negative gamma building on the 0 DTE. When that happens, that does set us up potential for a rally, as some of that is monetized. I do see the relaxation of negative gamma despite prices plunging. So on this past Friday, basically we saw a lot of those puts coming off in the indices, setting us up potentially to move higher as those were monetized. So you want to look at maybe playing a short-term scalping uptrend. So short the bounces, and within the Discord you can run the different commands here to watch the flow distribution. So we think today and tomorrow this is about all you're going to get in terms of a bullish setup. In terms of the bearish, the cumulative tick is in a longer-term downtrend. Again, short the bounces. But the flow divergences, just watch for a price and a flow disconnect. We think any cumulative tick divergences, you can short the downside, short those rips, and then a break below 4,100, as I was just saying, likely test the 4,000 area. I've updated the key levels here. We think that these are going to be fairly dominant levels overhead. Remember, we're at 41.31, which is down in this area. We've got a lot to plow through to get out of this. Not a lot of downside support here. So aside from being oversold, or quote unquote, what people would equate to oversold, there's not a lot of support below us. So just be aware of that. So that's it for today. Invite everybody to come join us at GammaEdge.us. That'll take you to a Discord sign-up page, 14-day free trial, all the tools turned on, great group of traders, all experience levels, good voice channel, etc. Just a lot of fun. GammaEdges on Twitter with an S, and then here, of course, on YouTube, GammaEdge. Note the C in the middle there. I don't know why they inserted that. Nevertheless, if you like today's content, hit that like button. Really appreciate it. And of course, subscribe. That helps us in the search engines and helps us get recognized a little bit easier. So with that, make it a great week. Be careful, guys. It's going to be an interesting week, and look for those reversals. All right, take care.